discuss this with the client, but unless it's something I really feel the client shouldn't do, I'm not going to push it, because ultimately the client has to be satisfied and it has to be comfortable. I could just basically put these things on the table to try to clarify the picture for them, and I want them safe. I don't want them to go to bed at night worrying.
Okay, well, that's that's good to hear, Nick. I'm just wondering now if there's an inventor with multiple products, should they do everything under one corporation, or should they have multiple corporations?
Again, that depends. I mean, I think if the products are in direct correlation with one another, you may keep a couple under one corporate umbrella. If they are totally separate products, you may want to open up separate corporations. And the reason for this also is strategic, in the sense that, let's say you're running with one thing and you have another product or invention, and you may want to unload one or sell one corporation. Having it segregated, it's just easier to do that.
Okay.
Rather than having to do a breakdown of a corporation and divest yourself of one product over another, and you're going to sell a piece of it. Or you may have investors that like one idea, and they're not really keen on another. And then here's where we go. Now, if you're getting a lot of outside investors, now again, you may want to go with an LLC. But that's why I'm saying there's just a lot of criteria that has to be looked at. But the thing there is, from the investor standpoint, you may have a product that's not hot on their list, but you may have two others that are. And that may basically prevent them from investing money in your business to help you grow it and succeed.
Okay. I have a question that came in from Brandon from Connecticut. He's asking if a DBA is considered its own company.
Well, a DBA is, you could have a DBA as a sole proprietorship, and you could have a DBA as a corporation. Okay? It's not separate and distinct from the corporation or from the individual entity. It's just an extension.
Okay, and DBA stands for doing business as?
Correct.
Okay. Nick, earlier in the show you mentioned about keeping records. And then later on you mentioned even if you have pristine records, that it's important. Now, with me, for example, the way I keep records, I have enough papers in my pocket from all the ideas I'm thinking about during the day. So now the IRS and my accountants are asking me to keep a record of all my receipts. So instead of doing that with the papers, I just use my debit card for my business account for everything that I do. Is that the right way to do it, or should I keep the...
Well, that's half of the equation. Because not only during an audit do they look at your credit card statement, but they also want to see the hard copy receipt. So today, it makes it a lot easier for everyone today because you have the Neat Scanner. You have apps to your cell phone, your iPhone. You have apps to your iPad where you can take pictures of these documents, scan them, and organize them. Software out there like QuickBooks and other software, you can scan receipts directly into the software. There's another product that I'm getting involved with for larger corporations that doing cash management and accounts payable, accounts receivable, and that's called Bill.com. You've probably heard of it, maybe you haven't. But that software, aside from maintaining tracking of all your accounts payable, all the bills that you have to pay, and your expenses, you're going to be getting emails of invoices and everything into a separate Bill.com account, and you're going to have all your records scanned into that. And at the end of the year, they could provide you with a disk with all your with all your bills on there, and they could be sorted alphabetically, by vendor, by dollar amount, by criteria. I mean, the use of technology today is making it almost impossible not to keep good records unless you're totally lazy.
But we're still getting little paper receipts when we go to a restaurant. What if you don't have those right now?
Well, again, it depends. I mean, technically, any receipt less than $75, as long as you're documenting the purpose of the meeting, the purpose of the dinner, who was there, et cetera, you could get away with it. Above and beyond that, technically you need a receipt. A lot of it has to do, it's a negotiation process if you do get audited. And let's face it, if you have 98% of all your ducks in a row, they're not going to quibble over a few things. But if your record keeping in general is a mess, they're going to be looking more for all the little hair on the eggs.
Oh, that makes sense. Now, are there certain criteria for saying that you're traveling and your car expenses and your business meetings and your flights and all that? Are there any criteria maybe that you can help us to identify?
Well, basically the criteria. I mean, it has to be for a specific business purpose for a deduction. In the area of being an inventor and bringing a product to market, you just have to be able to document that it had to do with bringing that particular product to market. Maybe you had to fly from New York or the East Coast to the West Coast to meet with certain people, for research and development or whatever the case may be. You just have to document that, because what happens is basically they're going to want to see this documentation, and they have to be able to confirm it in the event that it gets to that level.
Okay.
So if you're meeting with a certain law firm, or you're meeting with an engineer, or you're meeting with a manufacturing company, just document the purpose. And, eventually by the products that you're servicing and the products that you're generating, it's all going to come out in the wash anyway.
Okay, that makes sense. You mentioned earlier when we were going through the corporations, when somebody's saying that they're self-employed. When you say to somebody that you're self-employed, do you need to actually have some kind of filing, or can Brian Freed just say he's self-employed?
All right. Well, it's an item with many different covers. Basically, somebody may own a corporation. They may be the sole shareholder and say they're self-employed. However, they're truly not. They work for that corporation. Self-employed most of the time, in terms of the IRS regulations and things of that nature, is someone that's a sole proprietor. Because anyone that has a corporation, you're actually an employee of that corporation.
Okay, interesting. What other types of advice can you give, Nick, as we kind of transition from inventor to business owner, where we have a line of products, or we have that one line of product, and now we're in the manufacturing side of our product, or we might have licensed it. There's some income coming in, hopefully. That's the ultimate goal. What do you say at that point with kind of organizing what we need to do?
Well, basically it also depends on the format of your income and what form it is. Technically, a lot of you guys out there that have developed products and services like this are going to, you put your hands up and you say, look, I'm tired of trying to do everything myself and incurring the expense for it. I'm going to find a sponsor that's going to do my distribution, my manufacturing, etc. I'm going to sit back and just take the royalties. That's the easy way out. And the record keeping is not as detailed because you did all your research in the beginning phases, and now as the income starts coming in, the only thing you may be doing is going out there and doing some PR work to try to expand, your client base, your customer base.
Right. Nick, you also talked in the beginning, I heard you say that you're QuickBooks certified. What is QuickBooks, and when would somebody use QuickBooks, and are there any other alternatives out there for people to maybe compare?
Oh, there's many alternatives. I mean, QuickBooks is one of the premier small business accounting programs, and it comes in several formats and several price ranges. I mean, you could go out there and get one of the low-level versions of QuickBooks for about $100, and basically what you do with that, anytime you have to cut a check, you could have QuickBooks. You could order checks through QuickBooks or any other vendor that supplies paper products. And if you're going to send a check out, you cut a check through QuickBooks. That'll basically record the information in your bank account and also for the particular expense that's being charged. You could also do online payments with QuickBooks. You could do PayPal through QuickBooks. I mean, you could do pretty much anything. And what it does is basically it keeps a track of your bank account, of your bank balances, and of the money you're spending and where it's going.
Okay. Well, now, while you're doing that, and you're spending your money and you're starting to work with vendors, I've been I guess this might be something fairly new, or it might have been recently passed. W-9s. Everybody's asking to exchange W-9s. What does that mean, and when does that come into effect?
Oh, basically, anybody that is doing business with you can request that because they want to make sure that you have a valid ID number, whether it be a Social Security number or an EIN number, which is an employer identification number. That's really more associated with any type of business, whether it be a sole proprietorship or a corporation or an LLC or a partnership.
Okay. Now, what about when you pay somebody that is not a corporation and it's an individual? What happens?
Okay. With that, I mean, basically, if you're paying them more than $600 in a particular quarter, you're supposed to keep records of that, have a copy of the Social Security number on file, and at the end of the year, issue them a 1099.
Okay. And what if they're not comfortable? Somebody's building a website for us, and they're doing it on the side, and now we have to pay them $1,000, and they just want the check for $1,000 made out to cash. What happens, or to their name personally, and they don't want to give their Social Security number? What are alternatives, Nick?
Well, the alternatives to that, I mean, basically, if you could get fined $1,000 per 1099 that you did not issue. Okay, in the event that now I come across this a lot with different businesses where, somebody made a payment to an individual and either they forgot to get the number, or the person wouldn't give them the number. I will still prepare the 1099, and we will still send it out to cover that business and make sure that they were in compliance. The only thing today, if you don't have the ID number, actually you cannot electronically file those 1099s. You'd have to mail them into the Internal Revenue Service. The 1099s are similar to a W-2 for an employee of a corporation. The 1099s that you send out, depending on how many you send out and what the value is, they're all summarized on another form called the 1096, which is just the total dollar amount of all the 1099s that you issued. And that's like the cover sheet that goes along with the 1099s once it's sent into the Internal Revenue Service.
Okay, so when you see monies that are going out that are over $600, you're saying, in a quarter, you need to tell the other side, hey, I need a W-9 from you or a 1099.
Right. Well, you're going to need a W-9 because you want proof that they have a valid Social Security number. You may not be able to do the check on it, but at least you're covering yourself because you have the required documentation.
Okay.
Then what happens is it's up to you as the payor to issue the 1099 or have your accountant issue the 1099 at the end of the year.
Okay, got
to
it.
that individual.
Now, as we're continuing to build our business, we now have employees, Nick. So maybe you could just give some advice to small businesses wanting to start to grow where they're adding 1, 2, 3, 4, 5 employees. What do we do first, second, and third? Okay.
Basically now, and things change all the time, and there's several ways of maintaining, payroll records, but you're going to have some type of payroll system. I still have certain clients that have only a few employees, and we do what's called after-the-fact payroll, where someone comes to me and will say, Nick, I just hired Brian. He's getting $500 a week. How much do I have to pay him net? They don't even care about the breakdown because I'm going to keep the records of what the breakdown of the taxes are, behind the scenes. So I'll tell them, you give Brian a check for, let's say, $450 a week. So that's all they're concerned with. But the caveat to that is back in April, or about 2010, the New York State Department of Labor came up with another infamous law. And within that law, it is now required that you give each employee a pay stub every week with the year-to-date earnings, the withholdings, for that paycheck, and year-to-date. Otherwise you could be subject up to a $10,000 fine.
Is that for all over the country?
That's just in New York. Each state has their own mandates with that, but it's becoming more prevalent. Number one, because of the underground economy. They're trying, and they want to make sure they're collecting their employment taxes. and they want better record keeping from the small businessman. And yes, it is going to cost the small businessman a little bit more money unless they want to. I could show somebody how to do it themselves, where they could just go to a website